Based on the historical data and forecast, Bitcoin exhibits an overall upward trend, consistently testing and bouncing off the support price of $81,100. The RSI fluctuates around 40 to 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a long-term bullish strategy with a focus on capitalizing on pullbacks to the support level. The forecast predicts a continued upward trajectory, with prices hovering around $84,500 to $86,800. My strategy involves entering a long position when the price retraces to the $82,700 level. The stop loss will be set at $81,100, just below the support price, to mitigate potential losses. The initial target price will be $86,800, aligning with the forecast high for the week. If the price reaches $86,800, we will move the stop loss to break even to protect profits. A secondary target price of $93,900 will be considered if the price breaks above $86,800 and shows sustained momentum. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a slightly upward trend with periods of consolidation. The RSI consistently remains between 44 and 52, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of lower volatility. Considering the support at $328 and resistance at $345, I propose a moderately bullish strategy. We will enter a long position at $330, coinciding with the forecast price on March 31, 2025. To mitigate risk, set a stop-loss order at $326, just below the recent forecast price and support level. The initial target price will be $345, the resistance level, offering a potential gain of $15 per Bitcoin Cash. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, which currently sits around $395, we will raise the target price to $395. Conversely, if the price falls below the lower Bollinger Band, around $297, the position will be automatically closed, protecting against significant losses. This blended approach combines RSI-based entry and stop-loss with Bollinger Bands for dynamic target adjustments, aiming for high returns while managing risk effectively. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, STRK shows a volatile trend with periods of both upward and downward movement. The RSI consistently remains below 50, indicating a generally weak momentum. The price is currently near the support level of $0.62, and the forecast suggests a slight downward pressure in the short term. Considering these factors, I propose a contrarian strategy focused on short-term bounces. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. The entry price will be $0.604. A stop loss will be set just below the support level at $0.599 to mitigate potential losses if the downward trend continues. The target price will be $0.65, aiming to capture a quick profit from a likely bounce off the support level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, $0.561 to $0.536, while the RSI is below 30, it strengthens the oversold signal and provides a more precise entry point. However, we will prioritize the RSI signal for faster execution. The portfolio will consist primarily of this contrarian strategy, with a small allocation to a breakout strategy if the price decisively breaks above the resistance level of $0.874. This diversified approach aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below the oversold level of 30, indicating a potential for a rebound. The Bollinger Bands have narrowed recently, suggesting a period of low volatility followed by a potential breakout. Considering these factors, I recommend a long position with an entry price of $1,930. A stop loss should be placed at $1,860, just below the established support level, to mitigate potential losses. The initial target price should be $2,020, aligning with the forecast for March 25, 2025, and the upper Bollinger Band. To enhance the strategy, I suggest a dynamic approach. If the price reaches the initial target of $2,020, consider moving the stop loss to the entry price of $1,930 to secure profits and potentially ride further upward momentum. If the price continues to rise, set a secondary target price of $2,070, based on the recent high. This combined strategy leverages the RSI's oversold signal, Bollinger Band's breakout potential, and support/resistance levels to maximize returns while managing risk effectively. Based on the historical data and forecast, XRP demonstrates a fluctuating but generally upward trend. The price has been oscillating between the support of $2.39 and the resistance of $2.54. The RSI values, ranging from 43.3 to 55.1, suggest that the asset is neither significantly overbought nor oversold. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering the forecast for the next week, with prices hovering around $2.4, with a peak of $2.45, I recommend a long position. Entry price should be $2.35, with a stop-loss order at $2.33 to limit potential losses. The initial target price should be $2.45, aiming for a quick profit. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we will enter a long position at $2.35, setting a stop loss at $2.33 and a target price at $2.45. Conversely, if the RSI exceeds 70, suggesting an overbought condition, we will consider exiting the position or shorting. The Bollinger Band strategy will be used to confirm the trend. If the price touches the lower band, it could be an opportunity to enter a long position at $2.35, with a stop loss at $2.33 and a target price at $2.45. The most efficient portfolio combines these three strategies, prioritizing long positions when the RSI is oversold or the price touches the lower Bollinger Band, while maintaining a tight stop loss to manage risk. Based on the historical data and forecast, Binance Coin shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions for most of the period. However, the initial RSI values were below 50, suggesting a potential for a rebound. The Bollinger Bands have been widening, indicating increasing volatility and potential for price movement. Given the forecast prices are trending upwards, I propose a long position strategy. We will enter a long position at $628, coinciding with the first forecast price. The stop loss will be set at $579, aligning with the established support level, to protect against a potential downward reversal. The target price will be $654, reflecting the highest forecast price within the week. This strategy combines the upward trend, the support level, and the forecast data to maximize potential returns while minimizing risk. The RSI is currently around 53, so we don't need to consider the oversold level. The Bollinger Bands are widening, suggesting increased volatility and potential for price movement. This strategy aims to capitalize on the anticipated upward momentum of Binance Coin. This is a high-risk, high-reward strategy, suitable for experienced traders with a high risk tolerance. Based on the historical data and forecast, Stellar shows a slight upward trend with periods of consolidation. The RSI consistently remains below 50, indicating that the asset is not in an overbought condition. Considering the support price of $0.262 and the forecast prices, I recommend a long position strategy. We will enter a long position when the price touches the support level of $0.262. The stop loss will be set just below the support level at $0.25 to protect against a potential downward breakout. The initial target price will be $0.291, which aligns with the recent resistance level and a reasonable profit target. To refine the strategy and enhance potential returns, we will incorporate the Bollinger Bands. If the price touches the lower band around $0.248, it signals an oversold condition, reinforcing the buy signal at $0.262. If the price reaches the upper band around $0.303, consider taking partial profits and adjusting the stop loss to protect gains. The final target price will be $0.289, based on the forecast data. This combined strategy leverages both RSI and Bollinger Bands to identify optimal entry, exit, and risk management points, aiming for high returns while minimizing potential losses. Based on the historical data and forecast, Doge-Coin shows a clear upward trend. The price has consistently been above the support price of $3.59 and has tested the resistance price of $3.71. The RSI values have been fluctuating, but recently trending upwards, indicating strengthening momentum. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy. We will enter a long position at $3.59. The stop loss will be placed just below the support level at $3.55 to mitigate potential losses. The initial target price will be set at the recent resistance level of $3.71. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below 30, indicating an oversold condition, we will consider adding to our position at $3.55. Conversely, if the price touches the upper Bollinger Band, indicating overbought conditions, we will take partial profits at $3.71 and move the stop loss to break even at $3.59. If the price continues to rise, we will adjust the target price to $3.81 based on the forecast data. This dynamic approach combines trend following with momentum indicators to maximize potential gains while managing risk effectively. Based on the historical data and forecast, Cardano shows a fluctuating trend with periods of consolidation and minor upward movements. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show that the price has been approaching the lower band recently, suggesting a potential for a short-term bounce. Considering the support level at $0.701 and the recent proximity to the lower Bollinger Band, I recommend a long position with an entry price of $0.709. Place a stop-loss order at $0.699 to mitigate potential losses if the price breaks below the support level. Set a target price of $0.742, aiming to capitalize on a potential rebound towards the resistance level. To refine this strategy, we'll incorporate a dynamic adjustment based on the RSI. If the RSI rises above 60, consider taking partial profits at $0.731 and tightening the stop loss to $0.71. Conversely, if the RSI falls below 30, exit the position entirely. The forecast data suggests a slight upward trend, and the Bollinger Bands indicate a potential for a short-term bounce. This strategy combines technical indicators and price action analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Litecoin shows a fluctuating trend with support at $88 and resistance at $126. The RSI values have mostly been below 50, indicating a potential downtrend or consolidation. The Bollinger Bands show volatility, with the bands narrowing recently, suggesting a potential breakout. Considering the RSI is currently around 42.7, which is near the middle range, and the forecast predicts a price around $88.7 on March 25, 2025, I recommend a short position. Enter a short position at $93.6 with a stop loss at $96, above the recent high of the Bollinger Band. The initial target price is $91.2, aligning with the forecast for March 25, 2025. If the price breaks below $91.2, consider adjusting the target price to $88, the established support level. Conversely, if the price reaches the stop loss, it suggests a stronger than anticipated upward movement, and the position should be closed to minimize losses. This strategy combines technical indicators and forecast data to manage risk and maximize potential returns. The portfolio will allocate 50% of the capital to this short position, with the remaining 50% held in cash for potential opportunities arising from market volatility. Based on the historical data and forecast, Doge-Coin shows a fluctuating trend with periods of consolidation. The RSI consistently remains above 30, indicating that the asset is not severely oversold. However, it occasionally approaches the oversold level of 20, presenting potential buying opportunities. The Bollinger Bands suggest periods of volatility and consolidation. The forecast data indicates a downward trend, with prices expected to range between $2.16 and $2.27. Considering the support price of $2.38 and the resistance price of $3.06, the asset is currently trading within a defined range. Therefore, I recommend a strategy that combines RSI and Bollinger Band signals. When the RSI dips below 35 and the price touches the lower Bollinger Band, enter a long position at $2.16. Set a stop-loss order at $2.10 to mitigate potential losses. The initial target price should be $2.38, near the support level. If the price reaches $2.38, consider moving the stop-loss to break even. A secondary target price can be set at $2.48, aligning with the resistance level. This strategy aims to capitalize on short-term price bounces while managing risk effectively. Based on the historical data and forecast, Aptos demonstrates an overall upward trend. The price has been consistently climbing, supported by the rising Bollinger Bands and increasing RSI values. The RSI has moved from 40.7 to 56.3, indicating strengthening momentum. The forecast for the next week projects continued growth, with prices reaching $6.22. Given the current RSI of 56.3, which is approaching the overbought level of 80, and the price nearing the resistance level of $6.3, a cautious approach is warranted. We will implement a strategy focused on capitalizing on short-term pullbacks while maintaining an overall bullish stance. Our strategy involves entering a long position when the RSI dips below 40, coinciding with a touch of the lower Bollinger Band. Specifically, we will enter a long position at $5.68. The stop-loss will be set just below the support level at $5.55 to protect against unexpected downturns. The initial target price will be $6.06, aligning with the first forecast price. If the price reaches $6.06 and the RSI remains below 80, we will adjust the target price to $6.22, based on the final forecast price. This strategy combines RSI and Bollinger Band signals with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SE shows a slight upward trend with periods of consolidation. The RSI consistently remains below 50, indicating a generally weak momentum, but with recent readings nearing 45, suggesting a potential shift. The Bollinger Bands have been widening, indicating increased volatility. The support price remains stable at $0.192. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on short-term bounces. We will implement a strategy based on RSI and Bollinger Bands, prioritizing a buy when the price touches the support level and RSI is oversold. The entry price will be $0.191, coinciding with the forecast price for March 25, 2025, and the established support level. The stop-loss will be set at $0.188, just below the recent lows and the support level, to protect against a potential breakdown. The initial target price will be $0.201, aligning with the forecast price for March 29, 2025, and representing a reasonable profit target given the current market conditions. If the price reaches $0.201, we will move the stop-loss to the entry price of $0.191 to secure profits and manage risk. This strategy aims to capture short-term gains while mitigating potential losses, adjusting the stop-loss as the price moves favorably. Based on the historical data and forecast, Ethereum Classic shows a slight upward trend with support at $17.5 and resistance at $18.6. The RSI fluctuates between 39.5 and 47.2, indicating periods of oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 20, and the price touches the lower Bollinger Band. Given the forecast of $17.6 on March 25, 2025 Tuesday, we will enter a long position at $17.6. The stop loss will be set just below the support level at $17.3 to protect against potential downside risks. The initial target price will be at the resistance level of $18.6, aiming for a profit of $1. To further optimize the strategy, we will implement a trailing stop loss based on the upper Bollinger Band. As the price increases, we will adjust the stop loss to the lower edge of the Bollinger Band. If the price reaches $18.6, we will move the stop loss to $17.8. If the price continues to rise, we will consider raising the target price to $19, but only if the RSI remains below 80 and the price stays above the center of the Bollinger Bands. This adaptive approach allows us to capitalize on the upward trend while managing risk effectively. This strategy aims for high returns by combining trend following with volatility-based adjustments. Based on the historical data and forecast, Polygon exhibits a downtrend with periods of consolidation. The RSI consistently hovers below 40, indicating a generally oversold condition, with readings frequently dipping below 30. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The forecast for the next week indicates a continued, albeit slight, downward pressure. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will implement a strategy based on RSI, aiming to capitalize on temporary price rebounds while managing risk. The entry price for this strategy will be $0.204, triggered by the RSI reading of 31.1 and the price touching the lower Bollinger Band. The stop loss will be set at $0.19, just below the lower Bollinger Band, to limit potential losses if the downtrend continues. The target price will be $0.21, aligning with the support price and a conservative profit target based on the recent price action. This strategy combines RSI oversold signals with Bollinger Band confirmation and support level alignment to maximize potential returns while minimizing risk. We will hold this position for a short period, aiming to capture a quick profit from a potential bounce. Based on the historical data and forecast, AEVO exhibits an overall upward trend, with price fluctuations within the support and resistance range of $0.113 to $0.15. The RSI consistently fluctuates above the oversold level of 20, indicating that the asset is not severely undervalued. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Given this information, I propose a long-term investment strategy focused on capitalizing on the anticipated upward momentum. My recommended strategy involves a staged entry approach. First, enter a long position at $0.124, with a stop loss set at $0.113, coinciding with the established support level. The initial target price should be $0.13, aligning with the forecast price for March 27, 2025. If the price reaches $0.13, consider moving the stop loss to the entry price of $0.124 to secure profits and reduce risk. The final target price is $0.15, the resistance level, offering a substantial potential return. This strategy balances risk and reward by utilizing support and resistance levels and incorporating forecast data. Based on the historical data and forecast, optimism shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI to 37.5 on March 11 and 37.3 on March 13 suggests a potential short-term oversold opportunity. Considering the support price of $0.849 and the forecast for March 25 at $0.848, we will implement a strategy that combines RSI and Bollinger Bands. I recommend entering a long position at $0.848, placing a stop-loss order at $0.845 to limit potential losses, and setting a target price of $0.905 to capture a reasonable profit. To refine the strategy, we will incorporate the Bollinger Bands. Since the price is currently near the lower band, and the forecast indicates a slight upward movement, we can expect a bounce. Therefore, if the price touches the lower Bollinger Band, which is around $0.781 on March 11th, we can enter a long position at $0.781, with a stop loss at $0.778 and a target price of $0.86. This combined approach leverages both RSI and Bollinger Bands to identify optimal entry and exit points, maximizing the potential for high returns while managing risk effectively. The portfolio will prioritize the RSI strategy with a slight adjustment based on Bollinger Bands. Based on the historical data and forecast, STRK shows a fluctuating trend with support at $0.17 and resistance at $0.187. The RSI consistently hovers around the oversold level, indicating potential for a rebound. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the lower band. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.162, placing a stop-loss order at $0.15 to limit potential losses. The initial target price will be $0.187, aligning with the resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, indicating a strong oversold condition, we will enter a long position at $0.164, with a stop loss at $0.155 and a target price of $0.178. Conversely, if the price touches the lower Bollinger Band, we will enter a long position at $0.168, with a stop loss at $0.16 and a target price of $0.176. This combined strategy aims to capitalize on both the overall trend and short-term volatility, optimizing returns while managing risk. Based on the historical data and forecast, Solana shows a volatile trend with periods of both upward and downward movement. The RSI consistently hovers around the 36 to 50 range, indicating neither strong overbought nor oversold conditions. However, the recent price action suggests a potential upward momentum, especially with the forecast predicting prices to reach $139. Considering the support price of $135 and the Bollinger Bands, I recommend a strategy focusing on short-term gains. We will initiate a long position when the price touches the bottom of the Bollinger Bands, which is currently around $117. Set a stop loss at $113 to protect against a sudden downturn. The initial target price will be $135, near the support level, aiming for a quick profit. To refine this strategy, we will incorporate RSI signals. If the price retraces and the RSI dips below 30, we will enter a long position at $128, placing a stop loss at $125 and targeting $140. This strategy capitalizes on potential rebounds from oversold conditions. If the price continues to rise and the RSI reaches 70, consider taking profits or tightening stop-loss levels. The combination of Bollinger Bands and RSI offers a balanced approach, leveraging both momentum and volatility indicators for optimal returns. This portfolio is efficient because it combines the benefits of both strategies. Based on the historical data and forecast, Jupiter shows a volatile trend with periods of both upward and downward movement. The RSI consistently remains below 50, indicating a generally weak momentum. The recent RSI values have been fluctuating between 33 and 47, suggesting a potential for both oversold and overbought conditions. The Bollinger Bands have been widening, indicating increased volatility and potential price swings. The support price is consistently at 0.491, while the resistance is at 0.689. Considering this, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. Here's a tiered portfolio strategy for Jupiter. First, initiate a long position at $0.501 when the RSI falls below 30, targeting $0.53, with a stop loss at $0.491. Second, if the price touches the lower Bollinger Band, enter a long position at $0.458, aiming for $0.524, and set a stop loss at $0.438. Third, if the RSI exceeds 70, enter a short position at $0.567, targeting $0.524, with a stop loss at $0.583. This diversified approach leverages both momentum and volatility indicators to maximize potential gains while mitigating risks. Based on the historical data and forecast, Render shows a generally upward trend with recent fluctuations. The RSI consistently stayed below 80, indicating that the asset is not currently in overbought territory. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Given the current trend and forecast, I recommend a long position strategy. We will enter a long position at $3.26. The stop loss will be set at $2.68, just below the lower Bollinger Band, to limit potential losses if the price reverses. The initial target price will be $3.53, aligning with the support price. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we can consider adding to our position at $2.62. The stop loss would remain at $2.68. If the price touches the upper Bollinger Band, which is $4.27, we will consider taking partial profits at $3.82, securing gains while allowing the remaining position to run with a revised stop loss placed near the entry price of $3.26. This blended approach combines trend following with volatility signals for optimized risk-reward. Based on the historical data and forecast, Solana name service shows a slight upward trend with consistent support at $0.11. The RSI fluctuates between 39.1 and 48.0, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I recommend a long position strategy focusing on capitalizing on short-term upward movements. We will enter a long position when the RSI falls below 40 and the price touches the support level of $0.11. The entry price will be $0.11. To mitigate risk, the stop loss will be set slightly below the support at $0.099. The target price will be $0.12, aiming for a modest profit while respecting the recent resistance levels. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the bottom band around $0.104 and the RSI is below 40, it signals a strong potential reversal. In this scenario, we enter a long position at $0.104 with a stop loss at $0.098. The target price will be $0.12. This strategy combines RSI and Bollinger Bands to identify high-probability entry points. This combined strategy provides a higher chance of success and better risk management. The forecast data suggests a price range between $0.111 and $0.117, supporting the potential for a profitable trade. Based on the historical data and forecast, Doge-Coin exhibits a slight upward trend, bouncing between the support of $0.167 and a resistance of $0.198. The RSI fluctuates, spending considerable time in the oversold territory below 30, indicating potential buying opportunities. The Bollinger Bands show a narrowing trend, suggesting a potential breakout. The forecast for the next week projects a continued upward movement, with prices hovering around $0.175. Therefore, I recommend a long position strategy focused on capitalizing on short-term price fluctuations. My strategy involves a tiered approach. First, enter a long position at $0.165, coinciding with the start of the forecast period and a recent support level. Set a stop loss at $0.163 to mitigate potential losses if the price declines. The initial target price is $0.178, aligning with the recent resistance level. If the price reaches $0.178, consider moving the stop loss to break even. The second target price is $0.185, based on the center of the Bollinger Bands. If the price reaches $0.185, exit the position to secure profits. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, PEPE shows a slight upward trend with price fluctuations within a defined range. The support price remains consistently at $0.0000740, while the resistance fluctuates around $0.0000910. The RSI indicates that the asset is generally within a neutral range, occasionally approaching oversold conditions but rarely reaching extreme levels. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper or lower bands. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimized returns. My recommended strategy involves a long position entry at $0.0000740, coinciding with the consistent support level and a potential bounce-back opportunity. A stop-loss order will be placed at $0.0000720 to mitigate potential losses if the price breaks below the support. The target price is set at $0.0000850, aiming to capture a reasonable profit within the resistance range. This strategy combines the support level with the Bollinger Bands, which suggests a potential upward movement. The RSI readings are not extreme, suggesting a balanced risk-reward profile. This position will be managed daily, adjusting the stop-loss based on price action and RSI readings to protect profits and minimize potential losses. Based on the historical data and forecast, SHIB shows a slightly upward trend with price fluctuations. The RSI values have been fluctuating between 35.8 and 51.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the support price of $0.0000120 and resistance price of $0.0000150, a strategy combining RSI and Bollinger Bands can be implemented. I recommend a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price will be $0.0000112, with a stop-loss order placed just below the lower Bollinger Band at $0.0000110. The target price will be set near the resistance level of $0.0000145. To refine the strategy, we will incorporate the forecast data. The forecast price starts at $0.0000127 and gradually increases to $0.0000132. This supports the upward trend. Given the current conditions, I suggest entering a long position at $0.0000127 when the RSI is below 30. Set a stop-loss at $0.0000125, just below the lower Bollinger Band. The target price should be $0.0000135, aligning with the forecast and resistance level. This combined strategy leverages both technical indicators and price predictions for optimal risk-reward ratio and potential high returns. Based on the historical data and forecast, DOG-COIN demonstrates a fluctuating trend with periods of consolidation and upward momentum. The support price remains consistently at $0.466, while the resistance fluctuates but generally stays below $0.571. The RSI values indicate periods of both oversold and overbought conditions. Considering this, I propose a strategy combining RSI and Bollinger Bands to capitalize on potential price movements. We will implement a buy strategy when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.421, coinciding with the bottom of the Bollinger Bands on March 24, 2025. The stop-loss will be set at $0.41, just below the lower Bollinger Band to mitigate risk. The initial target price will be $0.517, aligning with the recent resistance level. To refine the strategy, we'll incorporate the forecast data. The forecast suggests a gradual increase in price, potentially testing the $0.522 level. Therefore, we will adjust the target price to $0.522. If the price reaches this target, we will consider a partial profit-taking strategy, securing a portion of the gains while maintaining a portion of the position with a revised stop-loss placed near the entry price of $0.466. This approach balances profit maximization with risk management, adapting to the dynamic market conditions and leveraging both technical indicators and forecast data for optimal results. Based on the historical data and forecast, Doge-Coin shows a slight upward trend. The support price is consistently at $0.0024, while the resistance is at $0.00317. The RSI has been fluctuating between 34.0 and 52.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been moving within a relatively narrow range, with the bottom band consistently below the current price. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI falls below 30, targeting the resistance level of $0.00317. Specifically, let's enter a long position at $0.00235. The stop loss should be placed just below the support level at $0.0022 to limit potential losses. Our target price is $0.00317, offering a significant potential return. To refine this strategy, we can incorporate the Bollinger Bands. If the price touches the lower band, it suggests an oversold condition, strengthening the case for a long entry. If the price approaches the upper band, it signals a potential overbought condition, prompting us to take profits or tighten our stop loss. Therefore, a refined strategy would be to enter a long position at $0.00235 when the RSI is below 30 and the price touches the lower Bollinger Band. The stop loss remains at $0.0022, and the target price is $0.00317. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. The strategy aims for a high return by capitalizing on short-term price fluctuations within a broader upward trend. Based on the historical data and forecast, Near Protocol shows an overall upward trend with periods of consolidation. The RSI consistently fluctuates, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands have been narrowing, suggesting a period of low volatility, but are now expanding, which could signal increased price movement. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. My strategy involves a long position with an entry price of $2.68 on March 25, 2025. The initial stop loss will be set at $2.52, aligning with the established support level, to mitigate potential losses. The first target price is $2.92, coinciding with the forecast price for March 28, 2025, and the second target price is $3.01, representing the resistance level. This strategy combines the momentum indicated by the forecast with the risk management provided by the support level and the resistance level. This approach aims to capitalize on the anticipated upward movement while protecting against downside risks. Based on the historical data and forecast, Internet Computer shows a generally upward trend, although with some volatility. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a continued upward momentum, with prices predicted to reach $6.01. The support price of $5.1 provides a solid floor, while the resistance at $6.76 represents a potential ceiling. Considering these factors, I recommend a long position strategy. We will enter a long position at $5.74, with a stop loss set at $5.1, just below the support level, to protect against significant downside risk. Our target price will be $6.01, based on the forecast data, offering a potential profit of $0.27. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently remains within the bands, suggesting moderate volatility. If the price touches the lower Bollinger Band, which was $5.16 on March 24, 2025, it could be considered a buying opportunity, as it indicates a potential oversold condition. Conversely, if the price approaches the upper Bollinger Band, which was $6.37 on March 24, 2025, it might signal a potential overbought condition, prompting us to take profits or reduce our position. Therefore, the final portfolio will be a combination of the long position strategy and the Bollinger Band strategy, with the entry price, stop loss, and target price of $5.74, $5.1, and $6.01 respectively. Based on the historical data and forecast, Injective shows a slightly upward trend with periods of consolidation. The RSI consistently remains below 50, indicating a generally weak momentum but frequently entering oversold territory below 30. The Bollinger Bands show that the price has been fluctuating within a range, with the bottom band frequently tested. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. We will use a combination of long and short positions based on these indicators. First, initiate a long position when the RSI falls below 20 and the price touches the bottom of the Bollinger Bands. For example, on March 25, 2025, the forecast price is $9.15, the RSI is 31.0, and the bottom of the Bollinger Bands is $7.82. Enter a long position at $9.15, set a stop loss at $8.85, and target a price of $10.5. Next, initiate a short position when the RSI exceeds 80 and the price touches the top of the Bollinger Bands. Since the RSI is below 80, we will not open a short position. This combined strategy aims to capitalize on both oversold bounces and potential breakouts, maximizing returns while minimizing risk. The support price of $9.26 provides an additional layer of protection for long positions. Based on the historical data and forecast, BTC shows a volatile trend with periods of both upward and downward movement. The RSI consistently remains below 50, indicating a generally weak upward trend. The forecast data for the next week predicts a slight upward movement, with prices fluctuating around $250 to $258. Given the support price of $258 and the RSI hovering around 40, I recommend a moderately bullish strategy. We will initiate a long position when the price dips to $249, placing a stop-loss order at $242 to mitigate potential losses. Our target price will be $265, aiming for a reasonable profit. To enhance the strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, around $257, it signals a potential buying opportunity. In this scenario, we will enter a long position at $257, with a stop-loss order set at $250 and a target price of $268. This approach combines the RSI's indication of a weak upward trend with the Bollinger Band signal of potential price reversals. Combining these strategies, the most efficient portfolio would be to enter a long position at $249 with a stop-loss at $242 and a target price of $265, and also enter a long position at $257 with a stop-loss at $250 and a target price of $268. Based on the historical data and forecast, THETA network demonstrates a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates, with values often approaching the oversold level of 20 and the overbought level of 80. The Bollinger Bands also indicate volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands to capitalize on short-term price swings. We will initiate a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, indicating a potential oversold condition. Specifically, let's enter a long position at $0.886. The stop-loss should be set just below the lower Bollinger Band at $0.878 to limit potential losses. The initial target price will be the support level of $0.918, offering a quick profit if the price rebounds. If the price continues to rise and breaks above the resistance level of $1.26, we will adjust the target price to $1.2. This strategy balances risk and reward, leveraging both technical indicators to identify favorable entry points and protect against adverse price movements. The forecast data suggests a price range between $0.884 and $0.909 in the short term, further supporting the entry point at $0.886. Based on the historical data and forecast, WorldCoin shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates above the oversold level of 20, indicating a lack of strong bearish momentum. The Bollinger Bands demonstrate periods of contraction and expansion, suggesting shifting volatility. Considering the support price of $0.877 and the resistance price of $1.2, I propose a strategy focused on capitalizing on short-term fluctuations while mitigating risk. We will utilize a combined approach incorporating RSI and Bollinger Band signals, prioritizing entries during periods of relative undervaluation. My recommended strategy involves a long position entry at $0.814, coinciding with a forecast price and the lower Bollinger Band touching the bottom of $0.814, signaling a potential bounce. A stop-loss order will be placed at $0.79 to limit potential losses if the price continues to decline. The target price is set at $0.904, aligning with the recent high and providing a reasonable profit margin. The RSI is currently at 38.7, which is not overbought or oversold, suggesting the price has room to move higher. This strategy aims to capture short-term gains based on technical indicators while incorporating risk management through a well-defined stop-loss. Based on the historical data and forecast, Hooked Protocol shows a mixed trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates, often nearing oversold territory, indicating potential buying opportunities. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a possible breakout. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. We will implement a strategy that combines RSI and Bollinger Band signals to maximize profit potential. My proposed strategy involves entering a long position when the RSI dips below 30 and the price touches the support level of $0.146. The entry price will be $0.146. A stop-loss order will be placed just below the support level at $0.144 to limit potential losses. The initial target price will be set at $0.152, aligning with the recent resistance levels and a reasonable profit margin. If the price breaks above $0.152, we will adjust the target price to $0.16, capitalizing on the upward momentum. This strategy combines the oversold signal from the RSI with the support level confirmation, while the stop-loss and target prices are determined by recent price action and resistance levels. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently remains below 50, indicating a generally oversold condition, particularly evident in the earlier part of the observed period. The Bollinger Bands show periods where the price touches the lower band, confirming the oversold nature. Given this, I propose a strategy focused on capitalizing on short-term bounces from oversold conditions. Specifically, when the RSI dips below 30, consider a long entry at $0.49. Place a stop-loss order at $0.443, just below the lower Bollinger Band to protect against further downside risk. Set a target price at $0.55, near the recent resistance level. To further refine the strategy, I suggest a second entry when the RSI rises above 60, consider a short entry at $0.55. Place a stop-loss order at $0.557, just above the upper Bollinger Band to protect against further upside risk. Set a target price at $0.505, near the recent support level. Combining both long and short positions allows for a more balanced portfolio, mitigating risk and potentially capturing profits in either direction. This combined approach, leveraging RSI and Bollinger Bands, aims to achieve high returns by exploiting short-term market inefficiencies. Based on the historical data and forecast, Polkadot has shown an overall upward trend, with recent price fluctuations. The RSI consistently stayed below 80, indicating the asset is not in overbought territory, and has recently moved above 50, suggesting strengthening momentum. The Bollinger Bands have been narrowing, indicating a period of consolidation, but the forecast suggests a continuation of the upward trend, with prices predicted to reach $4.64. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $4.45. Given the support level at $4.41, a stop-loss should be placed just below this level at $4.40 to mitigate potential losses. The initial target price should be set at $4.60, aligning with the predicted forecast price and a reasonable profit margin. If the price continues to rise and breaks above $4.60, the target price can be adjusted to $4.64 based on the forecast. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Filecoin shows a slight upward trend. The RSI consistently fluctuated, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest periods of volatility. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands to maximize potential returns. Initially, I would enter a long position at $2.94, coinciding with the first forecast price and the support level. A stop loss should be placed at $2.65, slightly below the bottom of the Bollinger Bands, to mitigate potential losses. The target price for this initial position would be $3.07, aligning with the forecast price and a reasonable profit target based on recent price action. Subsequently, as the price approaches $3.07, I would reassess the market conditions. If the RSI indicates an overbought condition above 80, I would consider taking profits and potentially opening a short position. However, given the overall upward trend, I would prioritize the long position. If the price breaks above $3.07, I would adjust the stop loss to $3 and set a new target price of $3.53, the resistance level. This strategy aims to capitalize on the upward momentum while incorporating risk management techniques to protect capital. Based on the historical data and forecast, Conflux exhibits a slightly upward trend with periods of consolidation. The RSI consistently remains below the 50 mark, indicating that the asset is not overbought. The Bollinger Bands show that the price has been fluctuating within a range, with the lower band providing support around $0.07 and the upper band resistance around $0.107. The forecast for the next week suggests a continuation of this trend, with prices hovering around $0.085 to $0.09. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. My recommended strategy is to enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Specifically, I suggest entering a long position at $0.0846. Place a stop-loss order at $0.0775, just below the recent low and a support price. Set a target price at $0.0925, aligning with the recent high and a reasonable profit target. If the RSI moves above 80, consider taking profit or reducing position size. This combined strategy aims to leverage the momentum of the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Ethereum name service exhibits a generally upward trend despite recent volatility. The RSI consistently remains below 30, indicating an oversold condition. The forecast for the next week predicts a price range between $15.9 and $16.7, suggesting continued sideways movement. Considering these factors, I recommend a long position strategy. Entry price should be $15.9. The stop loss should be set at $15.5 to mitigate potential downside risk. The initial target price should be $17, aiming to capture a moderate profit. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band of $15.5, it signals a potential buying opportunity. If the price rebounds and reaches the middle band of $16.5, consider moving the stop loss to break even. A secondary target price of $17.6 can be set if the price continues to rise, aligning with the recent upward trend. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Avalanche shows an overall upward trend with some volatility. The RSI consistently fluctuates between 35 and 54, indicating neither strong overbought nor oversold conditions for most of the period. The Bollinger Bands show that the price has been approaching the upper band recently, suggesting potential for a short-term pullback. The forecast data for the next week predicts a continued upward trajectory, albeit with some minor fluctuations. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the upward trend while managing risk. The entry price for this strategy should be $19, coinciding with the start of the forecast period and a slight pullback from recent highs. The stop-loss price should be set at $18.2, just below the established support level, to protect against a potential downward reversal. The initial target price should be $20.6, aligning with the forecast high for the week and providing a reasonable profit margin. If the price reaches $20.6, we will move the stop-loss to the entry price of $19 to secure profits and further capitalize on the upward momentum. The final target price will be $24.7, representing the resistance level, providing a substantial profit opportunity. This strategy combines technical indicators and price action to maximize returns while minimizing risk. Based on the historical data and forecast, Doge-Coin shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates between 35 and 48, indicating a generally neutral to slightly bullish momentum. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, but the price has bounced off the lower band, which could signal a potential for a short-term upward move. Given the current RSI around 42 and the forecast prices hovering around 0.0243 to 0.0252, I recommend a moderately bullish strategy. We will enter a long position at $0.0243, placing a stop-loss order at $0.0237, just below the established support level. The initial target price will be $0.0252, aligning with the upper end of the recent trading range and the forecast. To refine this strategy, we'll incorporate a dynamic target based on the Bollinger Bands. If the price reaches $0.0252, we will move the stop-loss to break even to protect profits. If the price continues to rise and touches the upper Bollinger Band, around $0.0288, we will set a second target at $0.0263, taking partial profits and reducing risk. This tiered approach allows us to capitalize on potential upward momentum while mitigating downside risk. The overall portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Bands, and 10% based on the support and resistance levels. This diversified approach provides a balance between momentum, volatility, and key price levels. Based on the historical data and forecast, PENDLE shows an upward trend, though with some volatility. The RSI consistently remained below 59.0, indicating that the asset is not currently overbought. Considering the forecast prices, starting from March 25, 2025, the price is predicted to rise to $2.71. I recommend a long position with an entry price of $2.47. Set a stop-loss order at $2.35 to protect against unexpected downturns. A reasonable target price would be $2.85, based on the recent high and the forecast. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the middle band, suggesting a potential breakout. If the price breaks above the upper Bollinger Band, which was $2.97 on March 24, 2025, it would signal a strong bullish momentum. In this case, consider raising the target price to $3. However, if the price touches the lower Bollinger Band, around $1.75, it's a strong indication of an oversold condition and a potential reversal. This strategy combines RSI and Bollinger Bands to maximize profit while minimizing risk, aiming for high returns in a volatile market. Based on the historical data and forecast, the sandbox shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip towards 35 suggests a potential short-term oversold scenario. The Bollinger Bands have been contracting, indicating a period of lower volatility, and the price is currently near the middle band. Considering the support price of $0.289, I propose a long position strategy with an entry price of $0.28 on March 25, 2025, Tuesday. The stop-loss should be placed slightly below the support level at $0.278 to mitigate potential losses, and the initial target price can be set at $0.299, aligning with the recent resistance levels. To refine this strategy, I will incorporate RSI signals. If the RSI drops below 20, it signals an oversold condition, prompting a long entry. Conversely, an RSI above 80 suggests an overbought condition, indicating a potential sell signal. Given the forecast for March 26, 2025, with an RSI around 36.7 and the price at $0.286, I'll maintain the long position. If the price breaks above the upper Bollinger Band, it signals a strong upward momentum, justifying a move to a higher target price of $0.301. The final portfolio will be a combination of the price action and RSI strategy, with the entry price of $0.28, a stop loss of $0.278, and a target price of $0.301. Based on the historical data and forecast, Decentraland exhibits a sideways trend with fluctuations around the $0.27 mark. The RSI indicator fluctuates between 38.1 and 48.7, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show price movement within a relatively narrow range, further supporting the sideways trend. Considering these factors, I recommend a neutral strategy with occasional short-term trades. I suggest a strategy based on the RSI indicator. When the RSI falls below 30, enter a long position at $0.263 with a stop loss at $0.257 and a target price of $0.28. Conversely, when the RSI exceeds 70, enter a short position at $0.278 with a stop loss at $0.283 and a target price of $0.268. Given the forecast for the next week, I anticipate the price to hover around $0.26 to $0.27. Therefore, prioritize the long position when the RSI dips below 30, as this aligns with the support price of $0.262 and offers a favorable risk-reward ratio. The most efficient portfolio will be a combination of these strategies, with a slightly higher weightage on the long position due to the anticipated sideways trend. Based on the historical data and forecast, ENG coin shows a slight upward trend with periods of consolidation. The RSI consistently hovers around the 35 to 45 range, indicating neither strong overbought nor oversold conditions. However, the forecast prices suggest a potential upward movement, especially towards the end of the week, reaching $0.0961. Considering the support price of $0.0924 and the resistance price of $0.101, a conservative strategy focusing on short-term gains within this range is advisable. We will implement a combined strategy using RSI and Bollinger Bands to maximize efficiency. Our strategy will involve entering long positions when the RSI dips below 30 and the price touches the lower Bollinger Band. Given the current RSI of $47.6 and the recent price action, we will wait for a pullback. If the RSI falls to 28 and the price reaches $0.0827, we will enter a long position with an entry price of $0.0827. The stop loss will be set slightly below the lower Bollinger Band at $0.079, and the initial target price will be the resistance level of $0.101. If the price reaches the upper Bollinger Band, which is currently $0.103, we will move the stop loss to the entry price to secure profits and protect against potential downside risk. This combined approach leverages both momentum and volatility indicators for a balanced and potentially high-return investment. Based on the historical data and forecast, Uniswap exhibits a fluctuating trend with a recent upward bias. The RSI consistently remains below 49.4, indicating that the asset is generally oversold. Considering the support price of $6.67 and the forecast for March 25, 2025, at $6.4, I recommend a long position entry at $6.4. A stop loss should be placed slightly below the support level at $6.35 to mitigate potential losses if the price declines. The target price is set at $7.5, aligning with the upper Bollinger Band and providing a reasonable profit margin. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. I suggest a second entry at $6.5 if the price shows signs of stabilization. The stop loss for this entry should be $6.4. The target price remains $7.5, leveraging the potential for a rebound toward the upper Bollinger Band. This combined strategy, utilizing both RSI and Bollinger Bands, aims to capitalize on the current oversold conditions while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, Chainlink shows a generally upward trend with periods of consolidation. The RSI fluctuates between 36.1 and 50.4, indicating occasional oversold and overbought conditions. The Bollinger Bands have been contracting, suggesting a period of decreasing volatility. Considering these factors, a combined strategy incorporating RSI and Bollinger Bands is recommended. We will initiate a long position when the price touches the support level of $13 and the RSI is below 30. This condition has not been met in the historical data. However, if the price falls to $13 and the RSI drops below 30 during the forecast period, enter a long position at $13, set a stop loss at $12.5, and target a price of $15.1. Alternatively, we can consider a strategy based on the Bollinger Bands. When the price touches the bottom of the Bollinger Band, which is $12.5, enter a long position. Set a stop loss at $12 and target a price of $18.5, the resistance level. Since the forecast prices are consistently around $14.5, we can adjust the target price to $15.1. The most efficient portfolio will be a combination of these two strategies. If the RSI is below 30 and the price is at $13, enter a long position at $13, set a stop loss at $12.5, and target a price of $15.1. If the price touches the bottom of the Bollinger Band at $12.5, enter a long position at $12.5, set a stop loss at $12, and target a price of $15.1. Based on the historical data and forecast, Aave shows a slight upward trend, but with considerable volatility. The RSI consistently remains below 50, indicating a generally oversold condition, with values fluctuating between 33.4 and 48.7. The Bollinger Bands have been widening, suggesting increased price fluctuations. The forecast data for the next week predicts a price range between $176 and $184, with a slight upward bias. Considering the support price of $178 and the RSI readings, I recommend a long position when the price touches the support level. The entry price should be $178. To manage risk, place a stop-loss order at $172, which is below the support level. A reasonable target price would be $190, based on the recent high and the upward trend. To enhance the strategy, we can incorporate the Bollinger Bands. If the price falls below the lower band, it indicates an oversold condition, confirming the RSI signal. If the price is above the upper band, it signals an overbought condition. For this strategy, when the price is at the support level of $178 and the price is below the lower Bollinger Band of $154, enter a long position with an entry price of $178. Set a stop loss at $172 and a target price at $190. This combined strategy leverages both RSI and Bollinger Bands to improve the probability of success. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, EOS demonstrates a fluctuating trend with recent consolidation around the 0.55 to 0.57 range. The RSI consistently hovers between 36 and 55, indicating neither strong overbought nor oversold conditions. However, the recent dip and subsequent recovery suggest a potential upward momentum. Considering the support price of 0.55 and the forecast price is slightly above 0.56, I recommend a long position with an entry price of $0.556. A stop loss should be placed just below the support level at $0.545 to mitigate potential losses if the price reverses. The target price is set at $0.596, aiming for a conservative gain within the recent resistance range. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently tests the lower band, suggesting potential buying opportunities. Therefore, a secondary entry point could be considered when the price touches the lower Bollinger Band, around $0.452. The stop loss for this entry would be $0.442, while the target price remains at $0.596. Combining both strategies, the portfolio will be diversified, mitigating risk while capitalizing on potential upward movement. This combined approach leverages both RSI and Bollinger Bands for a more robust investment decision. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI fluctuates between 34.5 and 53.6, indicating both oversold and overbought conditions. The Bollinger Bands consistently narrow, suggesting periods of low volatility followed by potential breakouts. Given the current RSI of 47.1 and the forecast prices hovering around $0.225 to $0.23, I recommend a moderately bullish strategy. We will initiate a long position at $0.228. The stop loss will be set just below the lower Bollinger Band at $0.213 to mitigate potential losses during a pullback. The target price will be set at $0.237, near the recent resistance level, aiming to capitalize on a potential breakout. To refine this strategy, we will incorporate RSI-based signals. If the price dips and RSI falls below 20, consider a long entry at $0.225 with a stop loss at $0.213 and a target price of $0.237. Conversely, if the price rises and RSI exceeds 80, consider a short position at $0.237 with a stop loss at $0.248 and a target price of $0.228. This combined approach, blending Bollinger Bands and RSI signals, should provide a balanced portfolio with high return potential while managing risk effectively. Based on the historical data and forecast, Suncoin shows a sideways trend with support at $0.0163 and resistance at $0.0198. The RSI fluctuates between 30 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting decreasing volatility. Considering these factors, I recommend a moderately conservative strategy focusing on short-term price movements. We will implement a combined strategy using RSI and Bollinger Bands to capitalize on minor fluctuations. My strategy involves entering a long position when the price touches the support level of $0.0163 and the RSI is below 30. The entry price will be $0.0163. Place a stop-loss order at $0.0158, just below the lower Bollinger Band. Set a target price at $0.0183, near the upper Bollinger Band and below the resistance level. If the price fails to reach the target within a week, exit the position. For the forecast period, if the price falls to $0.0161, consider exiting the position. This approach balances potential gains with risk management, suitable for the current market conditions.